As the Federal Reserve navigates the treacherous waters of inflation, all eyes are on the upcoming release of the Personal Consumption Expenditures (PCE) price index. This crucial economic indicator is expected to provide a glimmer of hope for those eagerly awaiting relief from the relentless pressure on prices. However, the path to achieving the Fed's 2% inflation target remains fraught with challenges and uncertainties. The core PCE price index, which excludes the volatile food and energy sectors, is projected to rise by a modest 0.2% in April, the smallest increase thus far in 2023. While this may seem like a cause for celebration, it is essential to view this development within the broader context of the Fed's ongoing battle against inflation. Fed Chair Jerome Powell and his colleagues have consistently emphasized the need for sustained evidence that inflation is on a downward trajectory before considering any cuts to the benchmark interest rate. The rate, which has been at its highest level in 2 decades since July, serves as a powerful tool in the central bank's arsenal to combat rising prices. The minutes from the Fed's last meeting reveal a growing consensus among officials to maintain higher interest rates for an extended period. Many questioned whether the current policy stance was sufficiently restrictive to bring inflation down to the desired level. This cautious approach underscores the delicate balancing act the Fed must perform as it seeks to tame inflation without stifling economic growth. As we await the release of the PCE price index, it is crucial to recognize that the road to price stability is not a straight line. The uneven progress in the fight against inflation, as evidenced by the contrast between the relatively flat readings in the final months of 2023 and the increases seen so far this year, highlights the complex nature of the task at hand. The accompanying data on personal spending and income will provide valuable insights into the state of consumer demand and the health of the labor market. While solid growth in the first quarter is encouraging, the flat retail sales in April suggest that consumers may be starting to feel the pinch of higher prices and slower income growth. As Oren Klatchkin, lead U.S. economist at Oxford Economics, aptly puts it, the report will likely provide some encouraging signs that the disinflation process hasn't completely stalled. With income growth slowing in a cooling labor market, consumers are gradually cracking, which should provide a continued disinflationary impulse in the rest of the year. Yet, with catch-up price pressure still in the pipeline, inflation will likely moderate only very gradually this year. The Fed's upcoming Beige Book summary of economic conditions across the country will offer a more comprehensive picture of the challenges and opportunities that lie ahead. As we navigate this uncertain economic landscape, it is essential to remain vigilant and adaptable. Looking beyond the United States, the global economic outlook presents its own set of challenges and opportunities. In China, the manufacturing sector's performance will be closely watched, with Industrial Data and Purchasing Managers Index (PMI) numbers providing key indicators of the country's economic health. The persistent deflation in producer gate prices and soft domestic demand may continue to weigh on profitability, underscoring the need for targeted policy interventions. In the Eurozone, the specter of inflation looms large, with consumer prices expected to accelerate in May. The European Central Bank (ECB) faces a delicate balancing act as it seeks to navigate the complexities of monetary policy in a diverse and interconnected region. While a quarter-point rate reduction in June seems likely, some policymakers are urging caution and arguing against a rush to ease further. Central banks across the globe, from Israel to Ghana, Mozambique to South Africa, are grappling with the challenges of managing inflation, supporting their currencies, and fostering economic stability. The decisions made in the coming weeks and months will have far-reaching implications for businesses, households, and investors alike. As we look to the future, it is clear that the path to sustainable economic growth and price stability will be marked by both challenges and opportunities. The Federal Reserve, along with central banks around the world, must remain vigilant and adaptable in the face of an ever-changing economic landscape. For ordinary viewers and those professionally engaged in finance-related work, staying informed and attuned to the nuances of economic developments has never been more critical. By understanding the complex interplay of factors that shape our global economy, we can make more informed decisions and contribute to a more stable and prosperous future for all. In the words of Jerome Powell, the path forward for inflation remains highly uncertain. As we navigate this uneven terrain, let us remain committed to the principles of sound economic management, while also recognizing the human impact of the decisions we make. Together, we can build a more resilient and inclusive economy that benefits all.